What's up, everyone, and welcome to the Daily Macro Update for Wednesday, February 18th. My name is Johnny Zerdy. Pretty interesting stuff happening in the markets right now. A little bit of a low volume day. We got Fed minutes as well as some more confirmation on the strength from the industrial as well as manufacturing side. And then, we'll take a look at the markets as well. So, welcome to today's daily macro updates. If you guys haven't already, subscribe to the channel on YouTube. For those who are on TikTok, if you guys want to see the actual, charts and everything like that, go ahead and head on over to our YouTube or our Instagram, where we are sharing that. For some reason, TikTok doesn't allow me to, stream from my Mac here onto their platform. But in any case, those other ones work well. If you guys are looking to incorporate macroeconomics into your investing process, right, with all the knowledge that's out there, actually using that with a process that you can repeat instead of, fall to your emotions, as well as, practices where you end up losing money, because that's the worst thing that you can do with your money, right? Head on over to our website, macro-optics.com. You can take a look at the two different services that we offer by hitting the Start Now button on the homepage. We got Macrovision and the 6-week challenge. I'll let you guys look at those for yourself. But yeah, those are our two offerings there for you to get started on your macro investing journey. So getting into the market here, we got the Fed minutes, and it was more so of a confirmation of what we already knew, right? So these Fed meeting minutes come out about a month later, and they essentially either confirm or provide more detail on what was discussed there. And from what we found was, you have, hold on 1 second here. Where is it? There we go. Yeah, so I mean, if you go through this, you can just copy and paste it into like ChatGPT or something. The main key takeaways was that it's a complete flip from the October fearfulness that was going on that led them to cut by 50 basis points, right? And that's something that the market was pretty much already pricing in. And this is more so just added color on that. They're willing to wait until something really breaks, and so. This was a pretty interesting dissent from a couple of the key FOMC members as well, who wanted to cut rates by 25 basis points, but obviously that didn't end up happening. And so there's a shift going on in the Fed, going from labor market fears to now inflation concerns, right? And ultimately, what that does is that increases the probability of further pauses and not, further rate cuts. And you can see this in the futures market here. Taking a look at the Fed Watch tool by CME Group, the probabilities for a March 18th Fed pause, a continued pause, went from 92% yesterday to 94% post this Fed minutes announcement. If you go over to the SOFR Watch to take a look, let me see if I can reload this, to take a look at the actual schedule here, according to, okay, well, it's not loading. Essentially, what it's still pricing in is, well, you can't really see it here. For some reason, it's having a little bit of a glitch. But still two cuts being priced in for the year of 2026. And so those could be pushed out even more depending on what inflation does from here. Because now that there's a focus on inflation and not so much the labor market, if we continue to get these downward, the downward trend in inflation, then that could produce more optimism for further rate cuts, right? And so the shift to inflation is back on. And ultimately, this is where it all was focused anyway, right? I think the focus on labor and things like that, I think is not so much. It's like it's like a tug of war that's going on at the Fed, But this is a cycle that we've been going through for quite some time, and over the past, couple of weeks, we've been talking about the no landing stop go cycle. And as we get lower inflation expectations, we'll probably get a buying opportunity in some of these major, tech stocks and things like that. But you want to get, at least a couple months. So this current trend could happen or could continue happening, for, you know, several weeks, right? We'll see though. We'll see what happens. We always want to be paying attention to the trend first and foremost. We never look at news headlines and then make a buying decision or a sell decision. We never look at some narrative of, oh, I think that nuclear is going to do well over the next year. I'm going to buy a bunch of nuclear stocks. Those are all losing strategies. And so, what you want to be paying attention to is the trend first and foremost. And right now, the trend in the S&P 500, taking a look at the SPY S&P 500 ETF, we can take a look at this and say, hey, this is a neutral trend. Volume today was pretty low, right? There's only 8 more minutes left in the session. And yeah, pretty low volume for today on this bounce. So that's a bearish divergence. Not saying that it's bearish just yet, but just taking a look at the momentum there, that's what we're seeing. Yeah, and this is starting to go red here. So it's not quite bearish just yet, but if we get another price drop here like we had on the 12th, then that could very much be the catalyst for it to go bearish trend in our model, in which case the lights behind me, instead of them being orange, will be red. So the ranges for the S&P 500 for today, they were the top end 694 and the low end 674. So it's a little bit above mid-range, but as you can see, the mid-range has been making a series of lower lows and lower highs here. So we'll see what happens from here. But technically a bearish divergence according to volume as well as volatility there. So interesting to see that with the index on the index level. And then some call outs still. I mean, we're getting bounces and things that have gone down a lot. Amazon, Nvidia, Microsoft, JP Morgan, all of which are in bearish trend. Out of the top 10, well, actually, all of the Mag 7 stocks are bearish except for Nvidia, which is neutral, which is still a wait and watch. So my team right now isn't touching anything in the Mag 7, right? Amazon, Google, Apple, Meta, not even looking at those. We're more so buying dips and things that have been having dips over the past few days, namely with energy, which had a nice little pop, right? So yesterday was a great big buying opportunity in energy and nice little 1-day flip, nice little almost 3% move after yesterday's dip. And that's really the way that you want to do it. Those are the dips to buy. Those are the things to find. Yeah. So really just seeing a bounce in a lot of bearish assets today on low volume, which, that's a big tell right there. So XLU utilities finally coming off of the top end of the trading range, presenting a little bit of a potential entry point finally after it had its huge acceleration last week. And so I wasn't buying this just yet, but I did like how it was on lower volume. So yeah, if I see it again tomorrow, getting closer, maybe it comes in a little bit below the mid range, I'm going to start making positions incrementally with utilities, as well as, for those who are in our communities, we talk about certain, single stocks within the utilities sector ETF that, we like and prefer, that will give us a little bit more juice, right? Because investing in these ETFs, you might get 3 to 10%, which is still great on these moves, right? Especially if you have a much larger portfolio. But for some people, they want to get more juice by owning a single stock. And so you got to be strategic on those, because not every single stock is created equal inside of a sector, as some of you may know. But that's what we were seeing there today. Same thing with real estate. So lots of great opportunities still to buy. I don't know why people are still just like hyper fixated on Bitcoin and the Mag 7. Bitcoin looks like crap. Does not look good. A little bit of a bounce in silver as well as some other precious metals today. Silver, my team and I have not been buying. Gold has been more of a buy because it has much better strength compared to silver. When you go ahead and take a look at the silver to gold ratio, let me see if I can find it here. Do I not have it? Where'd it go? Yeah, so silver to gold has been, losing strength here. You can just flip this if you wanted to see gold versus silver. You can flip it or just do manually gold divided by silver here. And as you can see, gold's having a nice bounce versus silver. And yeah, I'm going to continue to make moves on buying some of those on dips. Lastly, the dollar having a pretty interesting rebound here, pretty crazy bounce from the large moves downward that it made at the end of January there. And so, zooming out though, it still maintains its bearish trend, but it is interesting seeing this dollar bounce. And you want to be paying attention to different correlations versus the dollar. As well as we're seeing a pretty decent bounce with rates today. Similarly with the Mag 7s, these things are just bouncing after going down a lot. So things don't go down in a straight line all the time. Sometimes you're going to have these bounces here. So yeah, today was a pretty good day to clean up any losses that you might have, right? So any bags that you're holding that are having a bounce today, great time to either consolidate or get rid of them according to our process. I'm not giving you financial advice, of course. I'm just reciting what our process calls to do in order to risk manage. Yield curve continues to bull flatten. Now, typically the markets have done well in bull flattening phases, right? I mean, when you take a look at this phase right here between September of last year to October of last year, if you go ahead and put on the SPX over this chart, let's do this. Yeah, so even like last year, when you had this bear flattening where the yield curve went down because of the long end of the curve falling faster than the short end, that was more of a sign of, oh, the Fed's going to cut again soon. And so what did the S&P 500 do? During this time, it went up by 43%. Actually, it didn't do that. I'm actually on the different scale here. That would be crazy. Not 43%. Sorry. Whatever that is, whatever that move is over that time frame, it went up on this bear flattening. So not all flattenings cause for alarm. Really, the big alarm is when something actually breaks in the economy, and then we go back to a steepening because the Fed is injecting liquidity there, right? But that's not what we're seeing right now. And it's interesting, right? I mean, taking a look at this, pretty much since, let me see. Yeah, pretty much since October of last year, we've had a bit of an opposite correlation between the S&P 500 and the yield curve, meaning that if yields go up, or if the yield curve goes up, if we get a steepening effect, typically the yield curve doesn't, or the S&P does not like that. If you get a flattening of the yield curve, which is kind of what we're seeing right now, typically that is, favorable. But of course, that always changes, or that can change. But that's what we're seeing right now, is this opposite correlation. So, yeah, we see a continued flattening there. What else do we got? Interestingly, manufacturing new orders continues to accelerate. Manufacturing production, huge month. 2.4% year over year. When was the last time it was that high? Let's see. The last time it was that high was March of 2022. So you're clearly seeing a rebound in manufacturing here, as well as industrial production. So 2.3%. Let's see, let's go back. Yeah, essentially September of 2022. But industry and manufacturing continue to rebound. And I'm not sure why people aren't long, things like XLI, XLB, right? Look at these bull markets. Just in the past 3 months, materials are up 23%. And this is the ETF. That's not even counting the single stocks that are within this, right? Some of them are up double digits. So, let's just compare the S&P 500 to materials over this time frame. Yeah, the S&P 500 is basically flat while materials is up 20%. This delta is what's called alpha. And if you're not macro aware or not using macroeconomics with a risk management process in order to, take profits when you're supposed to and shift into these other sectors that might have a brief period of a few months of going higher versus the market, then you're going to miss out. And yeah, you don't want to lose to inflation as well as, lose, time there. So that's why incorporating macro into your process is so important. Yeah, I mean, just taking a look at the market ending here. Decent just rebound across things that have been down a lot, right? When you take a look at the S&P 500 here, let's actually go to the mono size and we can take a look at kind of the different sectors from a bird's eye view of what was doing well and good. And communications obviously taking the biggest hit today, right? As well as utilities. But utilities is in bullish trend, so that's what you want to take advantage of. Let's go over the past month. Yeah, over the past month, though, you can see that there's a lot of red color in tech, things like that, and that's really where the trend is. Bitcoin, crypto, still seeing a sea of red here. Yeah, not even touching that stuff. But that's all I have for you guys and gals in terms of the markets here. We can go ahead and get into some questions. But that's what we're looking at. Let's go ahead and get into the YouTube comments here. How long does this phase usually last? 6 weeks, 6 months? There's no telling how long. And anyone who says that it's going to take this long for this cycle to last, they are making it up and lying to you because nobody knows. And I understand like the thought process behind asking like how long will this last? But ultimately nobody knows. And it doesn't really matter how long it lasts. All that matters is that you spot the inflection points when they do happen. It's kind of like, let's say you're driving on a highway, right? And you're on a road trip, a 2-hour plus drive, let's just say. And, you're on this drive, you're paying attention to the road, right? You don't know when a, piece of stripped off tire from some semi truck is going to, come into your lane or you're going to approach it for being in your lane and you have to swerve out of the way. But when it gets to be around, 50 to 20 feet and you spot it, that's when you're able to get out of the way, right? And so during the entire 2-hour car ride, you're not thinking about, oh man, how long is it going to happen until the next tire scrap, comes my way and I got to swerve out It's like, no, I'm just paying attention. Then when it does happen, that's when I'll move. Right. So again, it doesn't matter how long. All that matters is, can you catch it when it happens? Now, our process does a good job with doing that, but that's the best analogy I can come up with here. Hey, Johnny, can you show the trading ranges for XLU and XLRE? Yes, I certainly can. Now, if you want those on demand, though, you can take advantage of our 6-week challenge, which you get access and a full license to use our trading ranges on TradingView here, so that you don't have to wait until the market closes, and now you got to wait all the way until tomorrow. So, yeah, XLU, you said utilities. Yeah, top end of the trading range 67.70, low end of the trading range 44.19. Pretty good spread there, as volatility has been ramping up in a positive way. And it's right near that midpoint, that yellow, you know. And then for real estate, yeah, similarly, top end of the trading range 44.17, low end 42.36. A lot of people ask, is your trading ranges just Bollinger Bands? Absolutely not. Bollinger Bands are a single factor indicator, meaning that they only take into consideration price action. This indicator right here that we have, it does provide ranges, but it's multi-factor, meaning that it takes into consideration not only price but also structure. It also takes into consideration volume performance, volatility performance. These aren't novel things, right? In fact, the person who I learned a lot from on this was actually Keith McCullough over at Hedgeye, and that was really the inspiration for creating our version of this, because they don't give away um, their IP, obviously, but myself as well as my team, us being inclined to math, we were able to think about it and go to the drawing board and figure out our own to create. But yeah, they're not Bollinger Bands. Hey, Johnny, do you see us heading into an environment where uranium holds its strength? Possibly. I mean, it had a pretty good run so far for the start of the year, and it's since pretty much where it topped out on the 28th of January. Pretty much the month of February, it's just been consolidating. But interestingly, looking at this recently here, I do like how it formed a little bit of a higher low right here compared to the immediate local low on January 5th. And then take a look at that volume that we had today. Nice little pop up. That's what you want to see if you're trying to start to think about some type of reversal here. Now, what would I do from here? I would not be chasing this just yet, because you still want to see a little bit more of a confirmation. And I would like to see personally something like this, where maybe it gives me another day of accelerating volume right to the top end of the trading range. And again, I probably wouldn't buy right there, but maybe let's say it comes back down to like right here, around like $70. Not saying it will. This is just like a concept that I typically wait for. Let's say it comes back down like that on lower volume and then, breaks through again. That's great. If it does pop up here, that'll probably push it back to bullish trend. You could either do that. That's a little bit more risky to do that, waiting for that first dip down. Or what you could do is, if it ends up continuing higher here, breaking out above that, and then coming down to like, 75 or something before going even higher. You could then just, wait for a pullback right here, you know. So that's what I typically like to do. Like I'm pretty patient because look, when you are patient and you're able to then confidently, capture the next big move up, that's really where you want to end up, at least for our process, right? The more bullish something is, the more you can take it to a max position on a pullback, you know? And so I really don't mind missing out on that initial like pump just to make sure that there's a high probability move higher after that, after it settles down. So I've just, I personally have just made way more money and I've also had a much higher success rate by being patient and not just rushing in after that first move higher or, actually just waiting for it and not trying to time bottoms, you know, like let the volume speak. Let the charts tell you when it's a higher probability to get back into something. That's why I really don't understand why people try and call bottoms on Bitcoin. It's like, why do that? I know the reason why they're doing it, and I used to do this like at the very beginning, which is I wanted to like make calls, right? I wanted to be the person who was like, "Oh yeah, I called the bottom on Bitcoin," right? But the thing is that what are your priorities there? That it's not making money; it's trying to be a superhero, and you're gonna lose money doing that. You're gonna lose money doing that. So I mean, it's like, why even try? Like, I have no problem waiting for something like Bitcoin to tell me when it's done going down, and then I'll give it more attention. In the meantime, there's plenty of other bull markets that are going on right now. You know, it's just money, guys. Don't have any type of emotional attachment to these types of things like Bitcoin or whatever, Tesla, you know. There's way too many people who get emotional about their positions, and as soon as you do that, it's done. You know, you're essentially giving your money to the house. But with something like Bitcoin here, I have zero problem with letting it maybe it kind of consolidates here and then it has like a breakout. Okay, cool, that's great. Love to see it. Maybe it comes back down a little bit more and it breaks out again. Okay, yeah, definitely in bullish trend now. Let's say it comes back again here, then I would buy it there, right? Because I want to catch I want to catch this move here. Where are my things all messed up? Here we go. I'm okay with missing out on, you know, I'm okay with missing out on this 44% move off the bottom while it confirms back its bullish trend if it means having a incredibly higher probability of success with making sure I'm in during the next 100% move higher, right? And a lot of people just aren't patient or they just don't have a process in order to help them do that. We certainly do, and that's kind of what we show people in our community there. But yeah, kind of went on a rant there. But let me take a look at some of the questions on Instagram. Let's take a look. Can you please look at Ethereum? Yeah, Ethereum's bearish. Let's see. Was that the only question? Okay. How about Palantir? Yep, Palantir's bearish. all these questions are from, all these tickers are just from, people wondering about the things that everyone talks about. Palantir, AMD, Netflix. Intel, right? Those are the questions all the time. We do cover those, by the way, in the Macrovision report. You get those ranges every single week at the start of the week. Let's see, any questions on TikTok here before we wrap it up? Let's see. Are we going lower in your opinion? I don't know where we are going, but the current trend for the S&P 500, with it going from bullish to neutral, that's a negative rate of change, and so there's a higher probability of us going lower from here. Yes, but it's not impossible for us to reverse higher. But the probabilities of us going lower are higher. All right. Well, we'll go ahead and wrap it up there, everyone. I appreciate everyone for joining. As always, if you guys would like to learn more about what we do, as well as the couple offers that we have, go ahead and go to macro-optics.com, click start now, and take a look at our 2 core memberships here. And yeah, we will catch you in, happy Ash Wednesday to any of my Catholics out there. I'm going to try and head to the 5:30 p.m. mass here. But appreciate everyone for joining. Have a great rest of your Wednesday here, and we will catch you tomorrow. Bye, everyone.